Ready? Right, good afternoon. Sorry, we're a little bit late today. You'll notice it's not the hulky Irishman Jerry. It is indeed me again. So sorry if you're bored of hearing from me, but I'm back. And yeah, at short notice. So let's rattle through what we have had go on so far today. So yeah, not a huge week as we've been saying all week. Really, it's not compared to last week. No week will be. I don't think we had so much out there. But yeah, pretty yeah, muted in terms of data in the day ahead. We've obviously had the unemployment claims through. That was kind of the big number that we had out this afternoon. Slightly higher for the first time in a while. If you have a look at the history of this data, we've had an awful lot of lower unemployment claims over the past few weeks. In fact, it was back to end of November last time we had a kind of worse than forecast figure. Everything either in line or in more cases than not better than expected. On this occasion, 5,000 worse, 5,000 more unemployment claims in the market had forecast. Jobs are going to be especially important, I think, over the course of the next 6-12 months. We've obviously seen Fed members yesterday through Powell, even on Tuesday, all talking about how tight this job market is. And yeah, as a result, some of the interesting comments from Williams yesterday was that he felt that they might need to stay in restrictive stance for a number of years. And that's ultimately what kind of created this slight sell-off that we had yesterday, especially the NASDAQ. I mean, that was weighed on quite heavily due to the bad news from Google about their AI. So yeah, already this was already looking like a potential short anyway. Around the open, we went back to the point of control. This is when we had those words from Williams. We had that initial wave to take the lows, tried to drag itself back, but really couldn't get it done. And quite a heavy sell-off into the European close around 4:30, which ended up being the low, pretty much the low. We got another little tag just to sweep them a little bit later in the day, just around 8 o'clock. But yeah, that was kind of the real news yesterday on the US indices, and it's all to do with the tightness in the labor market. The inflation's coming down, but yet so it's kind of pulling in two different directions, right? The US Fed have two mandates. They have price stability and they have full employment, and we most definitely already have full employment. Yeah, getting what 4% is deemed as good, and we're down to 3.4%, I think, on the unemployment rate. So one of those boxes is ticked, and if anything, it's too tightly or too boldly ticked. They need to get it a little bit softer. Unemployment is expected to, well, they're trying to get it arguably to rise, not that they can say it in explicit terms like that, but by saying the jobs market is a bit tight, kind of tells that story. So yeah, keeping an eye on these jobless figures will be interesting. Let's have a look at what moved on that. We were keeping an eye on gold. It wasn't quite big enough number for me to trade, but I know Brad next to me was hitting this number. The gold on the figure at 130, and yeah, he's done pretty well there. Already, yeah, well, currently up about what, $8, $9. But yeah, to the highs there, we saw about $10 rally on gold in a pretty straight line into 2 o'clock. So yeah, the reason this is one of those unusual numbers, right? That most of these numbers, when they're higher, they're kind of better, but unemployment claims is one of the few ones where higher is worse. So just bear that in mind when you're looking at this number. It can confuse you if you haven't had your coffee for the day. And yeah, just be aware that this higher number is obviously higher unemployed, not higher employed, that you get with the NFP figures and the JOLTS data with the number of job openings. Yeah, bear that in mind. Let's have a look back as well this morning on the German CPI. So it doesn't tell you too much just on the month-on-month figure. But if I show you the figures that we had around the harmonized version of the German inflation, well, these were both misses. The month-on-month was down from an expectation of 1.2 to 0.5. Year-on-year down from 10% to 9.2%. So really kind of soft inflation data relative to expectations on the harmonized version, and even on the year-on-year figure for German CPI, that was softer by 0.2, 8.9 to 8.7 with the forecast versus the actual there. So all in all, pretty soft data, and this led to a pretty nice start. I think a lot of us got on this morning at 8 o'clock, and yeah, it was straight out of the gate, straight line up really on the DAX. Easy as you like, a nice rally. How let's put a put a number on that in the first 5 minutes. Yeah, to the highs, you got over 80 ticks in those first 5 minutes. And even by, you could have got another 60 or so if you've held your nerve a little bit longer. I was out of this after 5 minutes. I was happy enough with that. Yeah, nice start when you can get those easy starts to the day. We did a zoom obviously around that CPI figure at 7. Those of you who are on it will notice that even though the Bund market moved quite significantly at 7, as you can see here, we had that big pop in the Bunds. Yet the DAX at that time did a sweet FA. We had a little spike up, pulled back, very little action there. So yeah, very much a quiet move from 7, but then we eventually got that move through later, and often that happens around that 8 a.m. Open, where you get the real action starting to come through that way. Let me just so yeah, let's fast forward to the opens. We are rapidly approaching, getting up towards some interesting levels here on the S&P. We've got a high volume node, which is kind of behaved nicely around yesterday. This was kind of the high from yesterday. We had a little nudge through to the monthly value area high before the sell-off, and we're back to these prices again. The stocks have been remarkably resilient, really, given the chat out of the Fed members of late. So yeah, something to bear in mind. And if you have a look at how the futures are looking, look at the markets here, the Nasdaq definitely leading the charge, 1.3% up on the day. Dow sluggish, 0.4. S&P 500 it's slotted in the middle there at about 0.75%. And yeah, in Europe as well, got a pretty nice day. FTSE grinding to all-time highs as well this week, pretty strong. And then maybe let's have a look at the order flow in those last few minutes before the open. So yeah, if you're looking at, I don't love when there's kind of a lot of orders stacked right here on an open. I feel like they can be eaten into a little bit. In normal markets, if we were up here, I'd be happy to get short that. I always like to look a little bit further out and see if there are some bigger liquidities, albeit we're looking 35 ticks higher than here, up at 4,200. There's 367 contracts looking to get short in the current order book as we speak. Yeah, as we pull into 2:30, you'll start to see the times and sales click through and see whether buyers versus sellers. I've got it set to do a minimum lot size of 25. So this can often see where the big hitters are getting in, a little bit more red. Yeah, it's pretty much in balance here. It's not been an absolute washout of buyers versus sellers in the first couple of seconds. If we drill in a little bit and zoom in on this, you'll be able to see that we have given back a little bit from those thick orders that came in just before the open. So that might be compressing price on this, but as we know, market on the open can be very jumpy. So yeah, waiting for these kind of an easier trade later in the day is probably what I'll be looking for. Let's have a fast forward, because I know we're not back on YouTube until Tuesday. So maybe let's quickly just jump to the rest of the week. We've actually got another piece of data out tomorrow. The University of Michigan consumer sentiment is probably the big figure out in the US tomorrow at 3, probably the biggest number out all week, really, apart from those German inflation figures. And then, yeah, UK GDP, although it comes with a raft of other figures. So, yeah, try and comb through that. Obviously, GDP is very backward looking. You're getting a lot of month-on-month figures here. So if these are big beats, big misses, you might want to zone in on construction, industrial production, manufacturing production, etc. If they're all big moves, then that might be interesting. We also got the EU economic forecast moved to Friday. They were supposed to be done today, but they've decided today they couldn't be bothered. Very European. They're doing it mañana. And yeah, at some point tomorrow, they haven't even given us a time yet. But that was originally due at 10 a.m. today. So maybe 10 o'clock tomorrow, you might get those economic forecasts out of the EU. And don't be surprised to see the likes of Waller and Harker moving markets, albeit Harker is a little bit late in the day for me to care. So yeah, back to the orders. And yeah, these orders are still kind of stepping in above price. So it is kind of compressing price lower. That's something you see a little bit of. We didn't manage to get a big pump through. And you can see that a lot more, well, I say that a lot more selling. There has been kind of more buyers than sellers on this decline. The cumulative delta since the open is actually up versus that, whereas the market has moved down. So it just shows that more sellers than buyers, or more buyers than sellers in this case, doesn't always push a market higher. Yeah, obviously the auctioning process is still allowing the market to soften on that. So yeah, just go easy this week. It's been a very different week, I think, to what we saw in the last couple of weeks. Certainly last week was an absolute monster. So just don't try and be a hero in these markets. Wait for opportunities to come to you. Take them when they come, and leave anything if they don't. There's no point in trying to and make as much money as you did last week, or on a good week, every week. You've got to, there are times to make money and times to protect it. And I think this week has been one of those, to be really selective and cherry picking the trades that you take. Hopefully we can get through this week, and CPI and Tuesday, and we won't be back on Zoom until after that as well. So CPI Tuesday 1:30. Can we get a 7th consecutive softer number? I know a lot of commentators are starting to suggest maybe we won't, but more on that next week. If you do want to join us, do find us on the socials, your Instagrams, and or chat us through the YouTube channel, and we'll be delighted to let you join our community. Thank you for joining us, and we'll catch up with you again